Welcome to The Deep Dive, the show where we cut through the noise and get straight to the insights. Today, we're taking a deep dive into the Q2 2025 earnings call for Webull Core, ticker BULL. We've sifted through the reports, listened to management, and, well, we're here to give you the most important nuggets from their latest quarter. Think of this as your shortcut to understanding Webull's performance and strategic moves.
Yeah, it was quite an earnings call, packed with significant updates, especially around, their global expansion and a major strategic re-entry into a key market. We'll break down the numbers, management's outlook, and what all these developments might mean for you, especially if you're tracking the fintech space.
Okay, so let's jump right into a snapshot of the results then. Webull reported a really strong second quarter, showing impressive top-line growth and continuing that remarkable streak of profitability they've been on. Total revenues surged by a significant 46% year over year, hitting $131.5 million.
Yeah.
That's a clear signal of strong momentum.
Mm-hmm. And what's particularly noteworthy here is that this revenue growth didn't just happen, by spending wildly. It actually significantly outpaced their adjusted operating expenses. Those were up a more modest 20% year over year. So this disciplined approach led to their third consecutive quarter of operating profitability. They hit an adjusted operating profit of $23.3 million and adjusted net income of $15.4 million. Now, you might see a GAAP EPS number, I guess 120 cents, but it's really important to understand that this is primarily due to fair value accounting, stuff related to SPAC shares and warrants. It's often a technical kind of non-cash adjustment tied to their IPO structure, not really their core operational performance.
Right, that SPAC accounting can definitely muddy the water sometimes. And the customer engagement side paints an even brighter picture, wouldn't you say? Customer assets saw just remarkable growth, hit a record $15.9 billion. That's a massive 64% increase year over year.
It really is huge. And net deposits showed robust growth too, up 37% year over year. The immediate market reaction to all this was modestly positive. The stock saw a slight uptick in after hours, suggests investors acknowledge these strong underlying fundamentals, even if it wasn't, an explosive overnight pop.
Okay, so let's dig a bit deeper into those financials. You mentioned operating leverage.
Exactly. The core story is disciplined execution and powerful operating leverage.
Yeah.
Basically, meaning they're growing revenues much faster than their costs are increasing. Webull achieved an 18 percentage point improvement in operating margin year over year. That's quite significant. Trading-related revenues were a major driver here, up a substantial 63% year over year. And their daily average revenue trades, or DARTs, increased 56%. So clearly indicates the platform is seeing more activity and they're doing a better job of monetizing it.
Yeah, and didn't they mention something about options pricing? I remember that being a factor. A key highlight contributing to that improved monetization, making each trade more valuable, was a new options pricing model they put in place late last year in 2024. We also saw interest-related income grow, 14%? To $36.3 million, supported by higher client cash balances and more margin activity, probably helped by things like Webull Premium, their subscription service.
Right. And of course, operating expenses did rise.
Yeah.
You expect that with higher transaction volumes, those new debit card deposit features and increased marketing spend. But like we said, the revenue expansion just significantly outpaced these costs. It really showcases strong financial discipline and, frankly, a healthy growth model.
Makes sense. Okay, turning our attention to user growth and customer assets. Globally, Webull added about 800,000 registered users, bringing their total to a significant 24.9 million. That's an 18% year-over-year increase, shows they're expanding reach across different markets.
Mm-hmm. It does. However, the growth in funded accounts tells a slightly more, let's say, nuanced story. While funded accounts grew 9% year over year to 4.73 million, the net increase quarter over quarter was only about 10,000. Now, this is primarily because roughly 100,000 inactive accounts rolled off. A lot of those dated back to the pandemic era, when online trading just surged. Management really emphasized their focus now is squarely on the quality of accounts and growing customer assets under management, AUM, rather than just chasing raw user numbers. They're clearly aiming for more sophisticated, more engaged retail investors now.
Right. That shift from quantity to quality seems pretty deliberate, and that focus is clearly paying dividends then, because customer AUM showed what management called explosive growth to $15.9 billion. That's a sequential jump of $3.3 billion just this quarter, fueled by, a recovering market and over $1.4 billion in net deposits. So it seems while some smaller, maybe less active accounts phased out, the larger, more engaged ones are definitely sticking around and bringing in significant capital.
Precisely. Now, let's talk about probably the biggest highlight from the call and a potential game changer for Webull. The relaunch of U.S. crypto trading in August 2025. You'll remember Webull previously moved away from crypto, mainly due to regulatory pressures back then, but management now sounds incredibly excited. They said things like, "This is a different time for our business," and crucially, the regulators are supportive. That signals a really important shift, both in the regulatory landscape and in Webull's own strategic positioning.
Okay, so crypto is back in the US for them. How are they approaching it? They're starting with what, 50 digital assets with clear plans to expand that number. And they're exploring features like staking and coin out in the future. That sounds pretty comprehensive. But you said this isn't just a US story.
Not at all. They've also successfully launched crypto trading in Brazil and Australia, and they have plans for further global expansion, actively exploring licenses in several other markets. It's definitely a global push into digital assets.
Wow, okay. And what about Webull Premium? How's that doing?
Another significant success story, actually. That's their subscription service launched back in March. It's already attracted 75,000 subscribers. That's well ahead of their own year-end target of 100,000. And importantly, these subscribers are showing increased average daily trading volumes. So it's a strong indicator of deeper engagement and better monetization for Webull.
Good momentum there.
Yeah.
They also expanded their partnership with Kalshi, right? Offering different kinds of trading.
Yeah, that's right. They're now offering crypto hourly contract trading and Fed events trading via Kalshis prediction markets. It just shows their commitment to offering diverse and frankly quite innovative trading opportunities beyond just standard stocks and options.
And globally, besides the crypto launches.
Well, they launched a consolidated Latin American app, simplifying things there. And they began rolling out their app in the Netherlands. Canada, which they launched in January 2024, is already considered one of the top trading platforms there, apparently showing accelerating AUM. So Webull now operates in 14 broker-dealers worldwide. That's a pretty impressive international footprint.
Okay, let's unpack their capital allocation and marketing strategy for a minute. Webull seems very well capitalized. They mentioned that's crucial for innovation. They raised over $200 million from incentive warrants in Q2 alone.
They did. And additionally, in July, they secured a standby equity purchase agreement with Yorkville. This gives them access to up to $1 billion of capital over the next 3 years. They've already drawn about $143 million. They call this flexible dry powder, and it's earmarked for global scaling and expanding their product breadth. And while the focus seems to remain on organic growth, they are openly considering opportunistic M&A. Which does raise an interesting question.
Like how they'll actually deploy that capital.
Exactly. How will they strategically use this significant firepower to really accelerate their global ambitions, especially in these new markets they're entering?
That's a crucial point. And maybe their marketing strategy shift in the US gives us a clue. They've moved away from that old open an account, get a free share model. Now it's more of a rewards-based approach, specifically targeting high-quality customers and trying to get large asset transfers from traditional brokers. Apparently, this has been highly successful in driving AUM growth, and they plan to lean into this opportunity with increased marketing spend. It really shows a clear, maybe capital-intensive strategy to capture market share from incumbents, which aligns perfectly with having that flexible dry powder available.
That makes sense. Okay, zooming out a bit to macro trends and their future outlook, management characterized the current market environment for retail self-directed trading as the best since the COVID-19 pandemic. They even called it a new era. They attribute this to major U.S. indices hitting record highs, improving risk appetite among investors, and importantly, a clearer regulatory environment, especially for crypto. These are pretty significant tailwinds supporting their aggressive growth plans.
Yeah, that new era comment is interesting. This environment, they believe, really empowers fintech innovation and broadens access to diverse asset classes. Looking ahead, they mentioned July was Webull's highest revenue month ever, and AUM has already surpassed $18 billion just in Q3 today. So they anticipate another solid Q3, assuming no major market dislocation. The momentum seems really strong.
Yeah, it definitely appears to be accelerating. So key near-term catalysts you'll want to watch closely. Continued traction from that crypto relaunch is number one, I think. Then further international rollouts, particularly in Latin America and Europe. Sustained wallet share gains from Webull Premium. Of course, the strategic use of that standby equity facility. In a larger context, it feels like Webull is actively taking market share, targeting those sophisticated investors and large asset transfers in the U.S. while rapidly building this multi-asset global footprint.
All right, so we've heard the numbers, we've heard the strategy, the potential catalysts. Now, let's switch gears for our This Is Not Financial Advice segment. Let's consider some potential future scenarios. Keeping in mind, of course, this is purely for discussion, not a recommendation. If we were to look at these trends through a more speculative lens, what might an outrageous but plausible trade idea look like?
Right, taking their strategic pivot and global goals and sort of projecting them forward, examining how these moves could play out.
Okay, here's my pitch then. A long-dated, out-of-the-money call option on BLOL, specifically looking at a strike price timed just after their next major European or Asian expansion announcement, one that includes their full crypto suite. My rationale. Look, they just launched in the Netherlands. Canada's a huge success. They've got 14 broker-dealers globally. Management explicitly said they're working with every regulatory body where we have a current broker-dealer to add crypto. And they're holding my tongue on upcoming product announcements. That just screams more to come, right? The market's initial reaction to Q2 was, well, somewhat muted. It suggests investors haven't fully priced in the long-term compounding effect of this global multi-asset strategy. So when they announce the next major market entry or a big product rollout in a key region that includes their full suite, especially crypto, that's when the market could really wake up. This option allows us to be positioned for that, that inevitable global land grab, not just the US crypto relaunch.
That's definitely a provocative idea, tying market reaction directly to future international crypto expansion. It leaves me wondering, though, about the specific timing and maybe which market would truly trigger that wake-up call you're anticipating. Yeah. Are we looking for, like, a major European economy, Germany or France maybe, or perhaps an entirely new continent for that kind of impact?
That's a good question. I'd argue it's maybe less about where specific country or continent and more about the completeness of the offering when they launch there and the perceived regulatory clarity within that new market. So if they roll out with, say, 50 plus crypto assets right off the bat and a clear path to staking or coin in-out features, that's a much stronger signal than just another regional launch with limited features. It's the combined message, regulatory support, real product breadth, and a significant new geographic footprint. That's the potential catalyst, I think.
Interesting perspective. Okay, so to recap the quarter itself, Webull delivered a robust Q2, showcasing strong financial performance with impressive revenue growth and, crucially, consistent operating profitability. They're clearly executing with discipline.
Key drivers include that strategic relaunch of U.S. crypto trading, definitely. Successful global expansion into new markets, and the strong adoption of Webull Premium, all contributing to those record customer assets.
Yeah, the company is well capitalized, strategically focused on acquiring those high-quality customers, and positioned pretty favorably within what management sees as an improving retail trading environment, that new era.
So as you look ahead, things to monitor are sustained crypto traction, further international rollouts, and the strategic utilization of their standby equity facility. Those seem like the key near-term catalysts. This has been a deep dive into Webull's Q2 earnings for Talk Tickers.
And remember, everyone, this information is strictly for informational purposes only. It should absolutely not be construed as financial advice. Investing always involves risks, and you should always conduct your own thorough due diligence before making any investment decisions.
Absolutely. Thank you for tuning in to the deep dive. We always appreciate you listening and encourage you to continue exploring the markets. Until next time, happy investing.